Welcome to Earnings Recap. Today we're covering Shopify's first quarter 2025 earnings report and call.
That's right.
And, just to give you a sense of their speed, their teams rolled out a shop app filter in less than a week, and they updated duties calculations over a single weekend after tariff changes. I mean, that's really moving fast.
Wow. Yeah, that's impressive agility.
So today we're going to break down their latest earnings and the conference call that followed. We'll try to put it all in plain English for you.
Exactly. We've gone through Shopify's Q1 2025 press release and listened to excerpts from the earnings call.
Right.
And our mission here is really to pull out the most important bits, the key insights about how Shopify's doing financially and where they seem to be heading.
Okay, let's dive right in then. The first thing that really stands out is their overall financial performance for Q1 2025.
Mm-hmm.
The numbers are, pretty compelling.
Mm-hmm.
Revenue jumped by a significant 27% compared to last year.
Yeah.
That brings it to $2.36 billion.
That's a big jump.
Yeah, and what's maybe even more impressive is their free cash flow margin. It hit 15%.
15%.
And get this, that's the seventh quarter in a row they've had double-digit free cash flow margins. So it's not just growth. They're generating solid cash.
Right. And that consistency is really something. This is actually the 8th straight quarter where their pro forma revenue growth was 25% or even higher.
Okay. Pro forma, remind us quickly.
Yeah. So pro forma growth basically gives you a clearer picture of their underlying performance, sort of adjusting for things that aren't part of the regular business.
Got it.
And their gross merchandise volume, GMV, which is the total value of everything sold on their platform, that's grown over 20% for 7 quarters straight.
7 quarters?
Yeah. I mean, that kind of sustained momentum, it really says something about the strength of their model, wouldn't you say?
Absolutely. It feels like they've found that sweet spot, strong growth, but also keeping an eye on profitability, making real cash, which, let's face it, built a lot of confidence, especially when things feel a bit uncertain out there economically.
Definitely.
Okay, so let's dig a bit deeper. What's actually driving this? GMV, you mentioned, up 23% year over year, hit $74.8 billion. What are the engines behind that number?
Well, there are a few key things happening. First, merchants already on Shopify. They're selling more, so that's good same-store sales growth.
Okay.
Second, they're still bringing in new merchants, like all over the world. And third, Europe really stands out. GMV growth there was 36%.
36% in Europe. Wow.
Yeah, it suggests their international push is really working.
And it's not just online either, right? I saw their offline GMV, like point of sale stuff, that also grew 23%.
Exactly. It seems their POS system is catching on, particularly with mid-market businesses, maybe those with multiple locations. They even mentioned brands like FAO Schwartz and Grand Seiko using it now.
So it's not just the small online shops anymore. They're really broadening out.
Right. It shows how the platform is becoming this sort of central command center for commerce, whether you're online, offline, or both. And interestingly, their B2B, the business-to-business GMV, that had another triple-digit growth quarter.
Triple-digit. But the number in the notes says 9% growth from last year.
Yeah, that 9% figure seems a bit off compared to the triple-digit claim on the call might be a typo or specific segment nuance in the source material. But the key takeaway from the call was definitely significant B2B expansion.
Okay, noted. And international overall.
International GMV grew 31%, and cross-border sales, transactions between countries, held steady at about 15% of the total GMV. Shows consistent international activity.
So it sounds like really balanced growth. Different merchant sizes, different regions, and 7 quarters in a row of GMV growth over 20%. That's pretty remarkable given, all the talk about economic headwinds.
It really is. And maybe we should pause on that. Why is that sustained 20% plus growth so important right now?
Good question.
Well, you look around and a lot of companies, especially in e-commerce, are seeing growth slow way down or even shrink. Shopify consistently beating 20% suggests they're doing more than just riding the e-commerce wave. They're actively taking market share, right? Their value proposition must be really strong for merchants.
That makes sense. Okay, let's switch gears slightly to revenue streams. Merchant Solutions revenue that was up 29% year over year, hitting $1.74 billion. What's the story there?
Well, the strong GMV growth is a big piece of it, obviously. A lot of those solutions, like payments and shipping, they scale directly with sales volume.
Right.
But a really key factor is how many merchants are now using Shopify payments. It's processing 64% of the total GMV now.
64%. Wow, that's huge penetration.
It is. It means more and more merchants are opting for Shopify's own integrated payment system, which is, good for Shopify and often simpler for the merchant.
And they're not stopping there, are they? They expanded payments into 16 new markets just in Q1.
Yeah, places like Mexico, Poland, Hungary, Greece, a whole bunch in Europe. They nearly doubled the number of countries supported, up to 39 now.
That's incredibly fast expansion. Huge potential for future growth there.
Absolutely. It just makes it easier for merchants in those countries to get started and manage their money. Plus, they launched multi-currency payouts in 20 European countries. That's a big deal for anyone selling internationally, helps manage exchange rates, potentially lowers fees.
And ShopPay seems to be on a tear too. GMV there grew 57% year over year. Over $22 billion processed.
Yeah, ShopPay is doing really well. And what's interesting is seeing bigger brands adopt it. You mentioned Purple, Birkenstock. They also said it's expanding across Tapestry brands. Think Coach, Kate Spade.
So ShopPay is becoming a draw for larger enterprises too, offering that smooth, one-click checkout experience.
Exactly. It underlines how Shopify isn't just for the little guys anymore. The convenience, the potentially higher conversion rates you get with something like ShopPay that appeals to businesses of all sizes, makes the platform stickier.
Okay, let's look at the other side of the revenue coin, subscription solutions. That grew 21% year over year to $620 million. What's pushing that number up?
Well, the main driver is pretty straightforward. More merchants signing up for Shopify plans.
More customers, basically.
Right. Plus, the pricing changes they made to Shopify Plus, their higher tier plan, are starting to kick in, especially as new, larger merchants come on board. And then there are higher variable platform fees contributing too.
And MRR, monthly recurring revenue.
Also up 21% year over year. We're seeing growth across the board, standard plans, Plus, which is now a big chunk, 34% of total MRR, and even their offline plans. It shows larger merchants are really seeing the value in Plus.
They did mention shifting to a 3-month paid trial in some markets. How might that affect things going forward?
Yeah, that's an interesting strategic shift. The idea is probably to give merchants more time to really see the value before fully committing.
So maybe slower initial signups, but better quality merchants long term.
That seems to be the thinking. It might be a slight headwind to the rate of new subscriber growth in the very near term, like this year, but the goal is likely higher retention and success down the line. It's about sustainable growth.
Interesting trade-off. Okay, another big theme from the call was AI. Artificial intelligence. It sounds like it's becoming really central to their strategy.
Very much so. And what's quite interesting is their focus on using AI internally first. They call it reflexive AI usage.
Reflexive AI.
Yeah, basically encouraging their own teams to look for AI solutions before asking for more people or resources. They've even built internal servers, MCP servers they called them, to make all their internal work data easier for AI to understand and use.
So using AI to make Shopify itself run better, more efficiently. Dogfooding, essentially.
Exactly. But they're also making big strides with AI tools for their merchants.
Right, like Sidekick, their AI assistant.
Yep. They've apparently re-architected the AI engine behind Sidekick so it can reason better, handle bigger chunks of data, and critically, it's now available in all the languages Shopify supports.
That's huge for international merchants.
Definitely. And it seems to be catching on. Monthly average users of Sidekick more than doubled just since the start of this year.
Wow.
Plus, they bought a company called Vantage Discovery to boost their AI search capabilities across the platform. Think better product discovery for shoppers.
So AI isn't just talk for them. It's being actively built into the platform to help merchants and streamline their own operations. That could be a real edge.
For sure. I mean, if Sidekick can genuinely help merchants make smarter decisions, automate tasks, maybe drive more sales, that's a powerful reason to choose Shopify over a platform with less sophisticated AI, right?
Good point. Let's circle back quickly to international. We mentioned Europe's strong growth, but what else are they doing globally?
Well, beyond that 36% GMV growth in Europe, led by the UK, Netherlands, Germany, they're actively investing in features specifically for international selling. Things like AI-powered translation tools, which are crucial.
Helps merchants speak the local language, essentially.
Right. And also new features to help merchants deal with different privacy rules and regulations in various countries, which is a real long-term commitment to growing outside North America.
And that ties into their move upmarket, too, attracting those bigger brands. They seemed quite bullish on their enterprise wins.
They really did. They mentioned strong growth from brands already on the platform, like Viore and BarkBox. But the new wins are significant. VF Corp is bringing 8 brands, including Dickies and Kipling.
That's a major get.
Huge. And also Follett Higher Education Group carrying beauty, which is part of some luxury fashion houses. Plus recent launches like Paper Source, J.W. Anderson from LVMH, Away Luggage, Therabody. The list is getting impressive.
So what's the draw for these big players? Why Shopify instead of, the traditional enterprise platforms?
Management pointed to a few things on the call. One is agility. Shopify lets them move faster than maybe some older, clunkier systems. 2 is ease of use. Even for complex businesses, the platform is apparently relatively straightforward to manage. And 3 is cost. They're positioning themselves as a powerful but more cost-effective alternative to legacy enterprise solutions.
And the point of sale system, the offline piece, seems key to this as well, right? That 23% offline GMV growth.
Absolutely. Getting retailers like FAO Schwartz and Follett onto their POS shows it's ready for more complex retail. And that partnership with Allo for same-day delivery via Uber and DoorDash, that's smart. It helps merchants compete on convenience.
Unified commerce.
That's the key word. Seamlessly connecting online and offline. That's a huge advantage Shopify offers.
Okay, but we can't ignore the elephant in the room. Market uncertainty, tariffs, potential economic slowdowns. How are they handling that?
Yeah, they definitely addressed it. They said they're watching closely, of course. But their data, at least through April, wasn't showing much evidence of a slowdown hitting their merchants significantly.
Okay, that's somewhat reassuring.
And cross-border GMV held steady. They also mentioned that the expiration of the de minimis exemption for goods from China, that small package import rule, they don't expect it to have a meaningful near-term impact. Apparently, it's only about 1% of their overall GMV anyway.
Only 1%.
Okay.
So maybe less exposure there than some might think.
Seems so. They also pointed to the diversity of their merchants, lots of different industries, and the fact that their buyers tend to skew a bit towards higher income consumers. Both factors provide some resilience.
And merchants themselves are adapting.
Yeah, they noted merchants are adjusting inventory, sometimes pricing, changing where they source things, but they haven't seen broad, widespread price hikes across the platform yet.
So it sounds like both Shopify and its merchants are proving pretty adaptable so far. What about the outlook? What are they forecasting for Q2 2025?
They're expecting revenue growth still in the mid-20s% range year over year.
Still strong, Ben.
Yep. Gross profit dollars growing in the high teens% range. Operating expenses as a percentage of revenue, they guided to 39% to 40%. Stock-based comp around $120 million. And importantly, free cash flow margin expected to stay strong in the mid-teens, similar to Q1.
So confidence continues for Q2. Continued growth, continued healthy cash flow.
Yeah.
What was the overall vibe, the tone from management?
Definitely confident. Confident they can deliver both growth and profitability. They kept hitting that merchant-first message, emphasizing agility, operational discipline.
They're responsive.
Exactly. And just this underlying belief that businesses, just do better on Shopify no matter what the economy is doing, positioning themselves as that essential partner.
Okay. And finally, the analyst Q&A, anything particularly juicy or insightful there?
Yeah, a few interesting points came up. Analysts asked about merchant sourcing and tariff exposure. Shopify basically said, look, sourcing is diverse, the direct impact on our GMV seems minimal right now, and our higher income buyer base helps. Someone asked specifically about China-based merchants in early May after some tariff news. Shopify said it was too early to tell definitively, but April and May, GMV trends overall were still strong. There was discussion about new merchant growth. SMB, the small to medium business side, remains strong. But enterprise is accelerating lots of interest from bigger companies fed up with old systems, looking for Shopify's agility and maybe lower costs.
And the AI focus. Did analysts ask about the cost impact?
They did. Shopify essentially said, no change to our free cash flow margin view. We see AI driving efficiency long term. And marketing spend stays flexible based on returns. It's not like they're suddenly spending wildly on AI development in a way that hurts margins today.
So AI is an investment in efficiency, not just a cost center.
That's the message. They also clarified marketing spend isn't targeted at one specific segment, just supporting growth everywhere based on performance.
What about AI shopping, like AI agents finding products for people?
Yeah, that came up. Shopify sees it as a big opportunity. They plan to be wherever consumers are looking for products, including through AI, and they're actively working on partnerships there.
Interesting. Any other Q&A highlights? Margins, POS?
Yeah, gross margins. Subscription margins are stable. Merchant Solutions margins are impacted a bit by payments growing so fast because payments has lower margins than subscriptions and some partnership changes. But things like their capital lending product, tax services, FX, those are margin accretive, meaning they help margins. And they reiterated the paid trial change is a temporary headwind for subscription growth rate in 2025.
Okay.
On point of sale, they highlighted their feature set, how fast they add new things, and the unified commerce angle as key differentiators. And on AI agents, they basically said, bring it on. More complexity, more channels means merchants need a central system like Shopify even more.
Fascinating perspective.
Yeah.
Okay, so let's try to wrap this up. Key takeaways from Shopify's Q1.
I'd say strong Q1 growth, strong profitability, GMV looks solid, Merchant Solutions, especially payments, firing on all cylinders, subscription growth steady.
Right. And big pushes in AI and international expansion seem to be underway.
Exactly. Plus, they seem pretty resilient despite market worries, and the Q2 outlook is positive.
For me, the real aha moment, maybe, is seeing that agility in action. That story about the shop out filter and the duty calculations.
Yeah, that was impressive.
It really highlights how that merchant-first focus isn't just talk. It translates into being incredibly responsive, which must be a huge differentiator for them.
Totally agree. That adaptability seems core to their success.
So here's a final thought for you, our listener, to chew on. With AI advancing so fast and the global trade picture always shifting, how might Shopify's position as this central hub for commerce get even stronger? What could that mean, the challenges, the opportunities for all the businesses, big and small, that rely on their platform going forward?
Yeah, definitely something to think about. Where does Shopify fit as commerce continues to evolve? Thanks for joining us for this deep dive into Shopify's latest quarter.
Thanks for diving deep with us.